All right, let's see what we get for advanced GDP. This is a big one, so let's see what happens to the dollar, see if it gets any movement. Only way it's going to generate movement is, of course, if it's something big surprise. So we have GDP for Canada, and look at this, advanced GDP for the United States actually showing some contraction compared to a 0.2% quarter over quarter growth. We actually saw a minus 0.3%. And let's see what's happening. Pretty flat there. See what gold is doing in response to that. Take a look at the indices. Look at that crazy candle on the NASDAQ. S&P 500, Dow Jones, big back and forth move. VIX, take a look at the dollar. Nothing substantial, actually. Not a huge move there. That is, to me, though, pretty surprising, considering that's a pretty good-sized drop. That being said, we did revise higher in the previous quarter. The employment cost index came in line. This is also a pretty good inflation indicator. The cost of labor is, of course, very important. It's an important input to inflation as well. Advanced GDP came in minus 0.3% compared to 0.2% growth. Dollar index in response to this is pretty mixed, not really making a big move in either direction. The NASDAQ back down towards session lows here, guys. We've got the 30-minute chart breaking lower as we speak. And that's a pretty appropriate response in my personal view, right? We do not want to see slowing GDP growth. That is concerning. Now, in some ways, that makes the likelihood of rate cuts higher. So this number, in my view, should actually support gold prices, which it seems to be doing, right? Slowing GDP growth is almost always a positive thing for gold prices. Does that mean we're guaranteed to rip higher for the rest of the day? No, right? Because new information is always kind of rolling into the markets. That's why, news gets everybody's attention for a little bit and then something else happens. But right now, the initial response here, prices kind of holding their moves this morning. So dollar index moved lower here this morning, right now just flat on the morning. Really not a big move in either direction for the dollar, but the NASDAQ makes a lot of sense. NASDAQ pushing lower here today off of this soft GDP number and coming right back into this area here. So I've been talking about buying the NASDAQ. Let me just clean up my chart here. So I really only want to see this on it's a cool little trick for you. You can actually make your certain indicators or drawings only visible in certain time frames. Just right-click an item. So I've right-clicked this trend line, visibility on intervals. I want to do only on the daily chart, current interval only for this trend line. So now when I go down to the 4-hour chart, you won't see that trend line. So looking at the NASDAQ, where am I getting long on this one? Well, we had this big kind of turnaround point on April 21st. So if I draw from swing low to swing high on this one, the point that I'm interested in possibly taking a stab on the NASDAQ based on the 4-hour chart, we've been consolidating up here. It's possible that we do see some further kind of pullbacks and downside move. If you get a move back down to the 38.2% retracement, I have a pretty strong reading on the edge finder currently for the NASDAQ to the upside, although that's going to lose some score once this GDP updates. We're going to lose some score on NASDAQ because of that, because we significantly missed expectations. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. With Friday's jobs report, we also have potential for scores on unemployment data, and jobs added data could significantly change as well. So we have potential score flipping stuff happening. One thing that kind of gives me some resolve, if you will, is the commitment of traders data still strong. Retail positioning shows put to call ratios still pretty extreme, or it was extreme, showing, sentiment still very scared out there, which is a contrarian bullish signal to me as well. Seasonally, it's a good time of year trend, trying to grind higher here, right? So we've got some positive factors that outweigh the negatives, even with a little bit of softness in the GDP quarter over quarter reading. A lot of times people say, well, but GDP came in and it missed. You'd still buy? Well, we look at things holistically here. We don't look at things just nothing. Like, this is a mistake so many traders make. They look at just the COT data, or they look at just seasonality, or they look at just the jobs report, right? Nothing, like, it's very rare that you get everything in line, bullish or bearish, all at once. And if you do, you know what the chart looks like? Usually it looks like this. It's either straight down or straight up. When everything's in line, there's very little pullbacks. So the choppiness in the score usually presents some pullback opportunities. So I think we could get some pullback opportunities off this GDP number coming in a little soft, especially with ADP. I mean, that's a double miss here this morning. You had ADP and advanced GDP come in soft. That likely gives us a pullback here on the NASDAQ. I wouldn't be surprised if we kind of grind lower here for the next day or so. And if we do that, that's interesting. That being said, I could totally miss the boat here on this one. Why? Well, let's say it goes down here, and then at 4:05 p.m. today, Meta releases their earnings. And let's just say Meta earnings are phenomenal. Boom, up goes the NASDAQ, up goes the S&P. Why? Because that's a huge company, and it's like an AI leader, right? So we have AI leaders producing their earnings reports this week after the bell. You have several big names. You've got Amazon. We had Google already. We had Tesla. We had Meta. These are big names. So keep an eye on those earnings reports, because again, I'm fully aware I might miss the NASDAQ trade by trying to wait for that move. And granted, I may also have the opposite happen. Maybe I do get my entry, and then Meta reports bad and we keep going lower. I stop out, right? We just move on. We don't, again, people are so scared of a stop loss that it inhibits them from just taking proper setups. Like, a setup is a setup. It's not a guarantee. And the second we can collectively kind of be like, okay, yes, we are taking a stab here, right? That's one of my favorite ways of saying, take a stab, take an attempt, try it, right? You're not going all in and this is it. This is your financial, reckoning or your financial breakthrough, right? That's not trading. That's gambling. So what I'm saying is NASDAQ comes down here. Okay, I take a risk here. I think the risk reward looks okay. And, let's just say I take the trade. Everything looked good, and I put my stop loss below this kind of gap window point, right? Let's say that's my trade. And let's say it works. In that case, the risk reward was obviously very good, and potentially we break higher, and great. But what if it doesn't, Nick? What if it stops out? Then so what? So what if it stops out? My position sizing, and hopefully yours too, for me personally, my position sizing, it doesn't freak me out if I take a stop loss. Like I have a gold trade right now that is kind of going against me. I'm not worried whatsoever. Like if gold stops me out, so be it. On to the next trade, right? What traders fail to do most of the time, they look at every individual trade very, very, with so much scrutiny, with so much pressure on themselves. They say, this gold trade's got to work out. Like I'm risking half my account on this, or I'm risking 10% of my account on this. They're risking way too much on one trade. Whereas really trading, you should be looking at your P&L over time, right? And who cares? Like as I'm drawing this line, think, does any one trade substantially make or break this sort of return? Like this is what we all want, right? We all want this type of return, something that has dips and valleys and all that, but over time it produces a positive return. That's what we all are striving for as traders. But what traders actually do is they do something like this, where every trade is doing this. And then what happens? They're risking so much that at one point, one losing streak, and they go to zero, right? Most traders can't hang simply because their sizing is way too big. It's like the simplest thing in the world. Trading is supposed to be boring, right? So if trading's supposed to be boring, what does that mean? That means your size should not be exciting to watch your trade.
But guys, right, these are my trade ideas for today, right? And there's a theme, right? And the theme is Aussie dollar weakness and New Zealand dollar weakness, right? And a bit of pound strength as well, right? And this strength came in yesterday. And so it's important to point out that I am an intraday technical trader, right? So I'm looking to be in and out of a trade within a day, maximum 2 days, right? And all of these trades are my trade ideas. Obviously, I'm not going to trade every one, right? That would be mental. And they're all highly correlated, right? But I couldn't get into these guys because there was just such big news coming out, right? Although they went in the direction we expected. And the same with Canadian dollar. We had GDP coming out from Canada. So I actually got into a pound Aussie dollar trade and a Euro New Zealand buy trade. So we're just going to look at one of these examples and understand why, right? Why I entered it from a technical point of view. Okay, so what I'll do, guys, I will start with the day chart, right? Let's remove all these trades now, right? So I will start with the day chart. And as you can see, right, this is in an uptrend. So I will just look at the facts of the chart. Right? And the facts are this: we're in an uptrend, right? And then prices retrace to this important support level. And then we've just had sort of disgustingly crap price action, right? Just prices contracting, right? No winners, losers. It's just not much happening in here. But yesterday we got this nice bullish candle that broke out of this choppy price action, right? And I would suggest we can potentially take price. I would aim for this high, maybe leave some profit to run, right? So the daily chart tells me I can buy this market, right? And then that's what I use the daily for, just purely for direction, right? And then I will look at the H4 for an entry, okay? So if we look at the H4 now, okay, we've had a nice last candle as well. And then with the H4, I'm just looking for trend, right? And as you can see, H4 is in a uptrend, right? We got a nice pullback to the moving average 20. And then we got a nice bullish candle, right? This candle here. And it's as simple as this, right? I entered here, started buying the market, put my stop below here, and this is my target, right? I'm looking for 1:1. I will take some profit if we hit profit up here, right? I'll take 80% profit and then I'll let 20% run. All right, so that's how I look at the market. Very simplistic and based on price action, right? And price action is, made up of structure and trend, support and resistance, candlesticks, and this concept of value, right? And that's it, guys. So pound Aussie dollar, I'm in this trade currently, all right? And then also, I wanted to take a real good look at the US dollar as well, right? Now, a good place to start with the US dollar is the dollar index. And I'm going to look at the monthly chart, right? Because this is really interesting, right? And the dollar is a bit like the point of no return for the US dollar. And we know Trump has been hammering the dollar. It is super weak, right? But I want to look at the monthly chart, right? I don't trade the monthly chart. I trade intraday, right? But what I want to show you here, guys, is this $100 level. Right, this big blue line here is the $100 level, and that is obviously a very big psychological level for the dollar, right? And because of that, it obviously becomes very good support and resistance. And in this case, it's become very good support, right? Since Jan 23, it has never broken below the $100 level, right? It's flirted with it, right? But it's always closed back into this level, right? Now, it's going to be, we literally today will see this candle finish, right? This is what makes this monthly candle even more interesting, right? Now, are we going to see the US dollar pull back into this level, right? Even if we ended up with a candle that looked like this, right? We have a bit of a wick. Excuse my candle, I've been drinking. I haven't really. But if we got a bit of a candle like this, but just had a bottom wick that closed back into this $100 level and this support level here, right? Then I would suggest, perhaps we can start seeing some US dollar strength bounce off this level. Now, if this monthly candle finishes like this, then no, that is not the case. That is a monthly break of structure, right? And that would suggest further room to the downside, right? It'll probably retrace, but then further room to the downside. So I just wanted to show you how much of a pivotal level the US dollar is at. And obviously we've just had ADP, we've just had GDP figures, and they were all pretty much negative for the US dollar. And what will be really interesting is if the market just ignores that data, right? Because the market is very conscious of this $100 level. So how this candle finishes today, let's go back to the daily candle. How this finishes today will be very, very interesting, right? We've had bad US dollar data, but could it push back up into here? And if the US dollar ignores that bad data and we still get a strong US dollar, then, is this the point where we start to see some US dollar strength? Now, again, guys, how I trade is all about confluence, right? And if you look at any of the US dollar majors, right, let's start with US dollar yen. Let's go to the weekly chart. They are all at, pretty much all of them, are at key support and resistance levels, right? Look at US dollar yen. Look at this key weekly support level, right? And look at that weekly candle that we had bounce off that level. That tells me potentially US dollar strength, right? If we look at pound US dollar, right? Weekly chart, we are at a key weekly resistance level, right? We're already starting to see some top wicks. Yeah. Will this US dollar strength continue? Right. So US dollar is sort of at the point of no return. Will it hold on to that $100 mark and we start to see some US dollar strength come into the market? Or are we just going to see further weakness, right? And today I would say is quite a pivotal day because it's the end of the month, guys, right? So yeah, just wanted to share that about the US dollar. Right, guys, have we got any questions? Would you like me to analyze any currency pairs, indices? Okay, all right, so I can see we've got a few things coming in. So let's have a look at the Dow Jones. This is for Saeed. Let's have a look at the Dow Jones. Now, obviously, we've had the maniac that is Trump just totally, manipulating the markets, right? We had this massive sell-off on the back of tariffs. Then we said, oh no, the indices are dropping like stones. I better put a 90-day pause. And the markets reacted bullishly, obviously, right? And this is the state we find ourselves. I'm actually going to put a level through here, guys, right? Because you can see there's a level through there, right? Now, if we just look at this from a technical point of view, right? On the weekly chart, we are in this downtrend, right? Clearly, right? Lower highs, lower lows. We're in a downtrend, okay? But we've had this huge bounce off of this level. And we're at an interesting level for the Dow Jones, right? This is potentially an area of resistance, okay? Now, because we're at a level of resistance, it doesn't mean I just want to sell it in a downtrend. Far from it, right? There's more things we need to consider when we trade. And you can see a big bullish bad boy candle, right? That's what I call them, right? But that is a big bullish candle. That is a big bullish candle, right? And we're feeling buyers and confidence come back in, right? There's still so much uncertainty, and a lot of it will be to do with, the America versus China tariff battle. How, if that continues to escalate, right, we might see some more selling, right? But if they come to some kind of agreement, we're going to see more bullish indices, right? But from a technical point of view, we're at a resistance level, but I don't want to sell it because we have so much buying pressure here, right? Now, also, guys, we're going to take a look at daily but before we do, let's have a look at the monthly as well, because I always like to look at the monthly chart when the month is going to end, right? And if we look at the monthly chart, really the last significant low through here, right, is this level through here, right? That is the last significant area of support and resistance, right? It was once resistance, it was once support, right? It's no coincidence that we get a reaction at that level, right? And looking at the monthly chart, right, you would suggest this is trend. We didn't break these lows and we've got a nice big bullish wick, right? This would say, okay, no problem. We can continue to buy the indices, right? And like I'm saying, guys, I'm talking from a purely technical point of view. Trump could open his mouth tomorrow or China could react and, we see this, right? But from a technical point of view, it's looking like a strong buy trade, right? And it's also, if it closes above the moving average 20, it's held on to, dynamic support as well. So it's tricky, right, at the moment. Yeah, if I go back to the weekly, we've got, so the monthly's very let's buy, right? But the weekly there's contradictory information, right? We're in a downtrend, but we're getting very bullish candles, right? But we're in a downtrend. So this contradiction is difficult to trade, right? What you might find is we just get a lot of sideways, crappy price action until the market is confident to carry on or fear creeps in and it carries lower, right? But let's have a look at the day chart. And yeah, as you can see, guys, there's a really important level here. Now, technically, right, if we break this level, again, I think we have room to the downside. If we get a bearish reaction at this level, right, I would suggest we have room to the downside. And again, I'm an intraday trader. I would trade either one, right, depending on what the candles tell me. But again, let's look at it technically, right? So this is, in a downtrend, right? But all of a sudden, we've got a new higher low, right? We're getting lower highs, right? And this high is holding. But are we starting to see higher lows?
Okay, so open positions. Still got Swiss yen open. This is a bit of a pain. It's just sideways moving, really. Came into some profit. We've had some drawdown. It's just been very, very bland, very boring. Euro dollar did take a long on this one, just hedging a little bit. Not hedging, it's not the right word. Just sort of seeing if we can get euro dollar to continue higher, see if we can get the US dollar to continue to basically drop off a cliff. I'm not super confident in this idea, to be quite honest with you. I do have Euro New Zealand. This trade is risk-free, and to be honest, this was a bit of a cheat, really. It wasn't even my trade. This was from MUFG. So we got a report saying that they're recommending a new long on Euro New Zealand. I decided to just copy and paste it. Basically, I'm not going to lie to you. And yeah, so far, so good. Now, Euro Pound actually was my work. I'll take credit for that one. This one, very, very simple. 50%, well, actually, a 61.8, sorry, a 0.618 pullback. Just looking for a 1 to 2, nothing too huge. The trend is still bullish. Again, fib pullback seems very, very straightforward. We did have an oversold RSI. The fundamentals for the euro, although I'm not super bullish on the euro, I would say that the euro has more steam compared to the what's it called? The pound. That's the word. And that's mainly driven by outflows of the dollar, inflows into the euro. The euro is the next liquid asset from the dollar. So when we see liquidity flows come out of the come out of the dollar, generally we'll see the euro benefit from that. So that's the thought process behind that. Very, very simple, very straightforward. The watch list is very slim. I'm not really looking to take anything else, to be honest. Dollar Swiss was one I was watching. I think it's on the Edge Finder as well. Let me just double check. Yes. Hold on, let me pull this over for you so you can see it. Here we go. So yeah, dollar Swiss, -8. So I think this is probably the only trade I'm actually that interested in. There's really not much else that's interesting me. Silver, I'm not in this position. I was looking at it. Seems quite good. I still like silver to the upside in the long term. I think it's still very undervalued. I've been saying this for a while. I think silver could easily head towards $40, but it's more a case of just waiting. I wouldn't want to buy silver where it is right now. To be honest with you, I'd be quite happy to buy silver if it comes down towards 28 or $28. But other than that, yeah, just not too bothered really, especially with the risk sentiment changing. Risk seems to be a little bit more on at the moment than off. So yeah, buying commodities or specifically precious metals isn't in my plan right now. Gold was another one. I was looking to buy gold with stop loss here, looking for about a 1 to 1.5. But also, again, it's the same idea because we've got risk calming down a little bit. Can't justify buying gold right now. We do have the 90-day pause on tariffs. It seems like there's hope that we're going to have a trade talk between China and America, but yeah, it's just not something I want to be involved with right now. Excuse me, as I said, it's really hot here, so I have to keep hydrated. Oil. Oil's interesting, not because of the chart, really. I mean, the chart's quite nice. I was looking to go short on this fib. I didn't do it because I didn't have really enough of a reason to. And I'm not sure if Nick's pointed this out. One of my viewers did in my stream this morning. The put-to-call ratio on oil spiked massively. I'm not sure if this is a bug. I'm not sure if this is real. I don't know. I really no idea. But this is huge. This is a huge move to extreme fear on oil. And it seems strange to just happen for seemingly no reason, as far as I'm aware. So that would be a signal to possibly go long on oil, actually. I'm not. It's not. I don't want to do that. But if you like to trade contrarian and you've got already some sort of bullish idea on oil, that might be your signal to possibly get into it. NASDAQ, potentially also a nice long position. If we go back to the Edge Finder and we look at the NAS, our good old friend, we are still at extreme fear. Not as much as we were yesterday. Was it yesterday? Yeah, yesterday. But it is still quite above. So it's a little bit of a bullish sign there. We've also got the NASDAQ here with a bullish reading of 8. So that's another little confluence. So NAS might be one to look to buy. In my situation, normally I would use a fib here. And it does look very good because we've still got this market gap that's open that I think should get filled at some point. When I say should, there's no guarantees, you know, that's just not how trading works. But I can't really see that just getting left open, to be honest with you. The only other thing is that we are at the 200 and the 50 EMAs that look like they want to cross here, along with previous structure. So it's very possible that this is going to be just a very simple break, which we've had, and then the retest, which is here, and then continuation higher. So I am looking to buy the NAS, but it is just a case of waiting. If we can see some sort of bullish reaction here, whether it just be a bullish candle close, wick rejection, if we can just see something here, I might look to go long. But at the moment, just can't do it. Finally is dollar yen. I think dollar yen remains one of the best short positions there is. It's just tricky because it's too low for me to sell right now. I would be quite happy to look for sort of 130 to 135 as profit targets. But again, I just can't justify selling it here. I know, actually, let me just double check. Who is it? Danske Research has a sell limit on dollar yen at 145. 145 on the dot, the cycle level. So go like this. So they've got sell limit there. The take profits down at 130. Actually, let me just double check. Yeah, the take profits at 138 and the stop loss is at 148. So let me just mark this up for you. So take profit is 138, stop loss is at 148. So this is Danske Research's position. It is a sell limit, obviously. So this might be something I'm interested in. If we can see price pop up to that level, I might consider an execution low risk and just see if we can get it. I'm still happy with this idea of sells below 150. There is no real reason to go long dollar yen right now, as far as I'm concerned.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.